How do you decide how much to risk per trade? Risk is not a static variable. I don't use the same risk for every trade that I take. Risk is a dynamic variable that is dependent on the probability of the trade working out. Let me give you a small example, an extreme example. Let's say I give you a trade right now and I say this trade has a 100% probability of working out. There's no way it loses 100% probability guaranteed. How much risk would you take per that trade? Would you take a 1% risk, a 0.5% risk? Of course not, because the trade is a guaranteed trade. So you can go ahead and risk your whole account. You can risk 20%, 30%. So risk is not a static variable, a fixed variable. It is a dynamic variable that is dependent on the probability of the trade working out. In a realistic scenario, there's nothing 100%. There's nothing that is guaranteed. However, there are certain trade ideas and investment ideas that have higher odds of working out than other trade ideas and investment ideas. For example, on 30 April 2026, I sent you guys an email telling you that I'm going to be buying the Japanese yen as a result of the Japanese government deciding to interfere in the FX market. This is a high probability trade idea, a high probability investment idea. Why? Because it is the government itself, the Japanese government itself, deciding to buy billions of dollars worth of Japanese yen. And as a result of that, this has very high odds of strengthening the Japanese yen. However, today, for example, I sent you guys an email telling you that I'm buying NZD CAD through to the upside as a result of the peace talks that are happening between US and Iran, which are bearish for oil prices. And given that Canada exports oil, this is bearish news for the Canadian dollar, and as a result might push NZD CAD through to the upside. Now, this is not a high probability trade idea, because when we look at the news, we see, for example, Trump saying that the peace draft that Iran published publicly to the news is false, and that Iran is not dealing in good faith and all that. So we have contradicting news. And when we have contradicting news, the probability of a trade working out goes lower. Therefore, to summarize, the higher odds of a trade working out, the higher the risk it deserves. The lower the odds, the lower the risk it deserves.